Maximus Analysis here from May 11th, 2016. And starting with the ES on the daily, we did get that kind of similar pattern to that what we had on 12/29 that I posted yesterday. And we really have to see if they're going to break the 2048 level. Again, I'm not saying that it's going to waterfall all the way down similar to this pattern, but that's the level that I'm looking at. But the key level again is the monthly low of 2026. So continue to watch those two names. Keep yourself flexible. Again, be fine with missing the move. Again, there was a lot of people probably caught on the long side, unfortunately, and just now kind of just hoping that these lows hold of 2030. And you still know that the highs on the weekly time frame, which we'll show here, are still giving the lower highs. Again, if I show you the continuous contract, that was the M contract, you can see exactly what I'm talking about in regards to the weekly time frame. So they're still not out the woods yet, and we need to see what this weekly bar closes. Again, this is my bull trend line. When they break that one and close below it for at least one or two closes, then I would say that they're in a bear market. Until then, I'm just looking at these levels and keeping a flexible mind always. So the NQ, we're looking at the NQ on the weekly time frame, but let's look at the daily. We need this 43.23.5 to hold. Okay, it pretty much brings us right around here, which you can see it's an obvious level, and this would be an obvious lower high as well against a 200-day moving average. So when things are obvious, you go with a lighter position, even if you get the sell signal or buy signal. Signals on a whole. Again, when everybody's starting to say, oh, we're bullish, 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 bearish, 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 that's when you kind of get a contrarian type of, let me make sure I'm looking at things properly. YM on the daily, we've always talked about the 17.5 level, 17,450. Crude was interesting because, again, this is why I sometimes say you can always look at things for correlations, meaning the ES and the CL, but it won't be exact. And again, you got to make sure you still trade them accordingly, because most people would say, okay, crude is up, which again, we had EIA report and it did go up, but this continued to show follow through all day, while the ES actually faded very badly after the report of 10:30. But there was some things that I was looking at during the day where I was like, and you'll see it if you follow me on Twitter, I was saying, well, where are the rest of the beta names showing up? The only one I see really showing up is Amazon, and Tesla showed up and then gave it all back by the close as well. So I was like, where's everybody else? Where's Google? Where's Facebook? And all these names weren't moving except for this one name. So if they break above for crude this 46-47 level and close above it with some volume, we're looking at them to touch that 50 to 51-57 level. We'll continue to watch from here. Again, we'll look at some names here, and we see Amazon again going to record highs, starting to get some high volume. We really want to see how this weekly candle closes. Again, if they close under the $700 level, or that they're about 690, that would give a hell of a shooting star, which we will continue to watch for. Again, the volume is dying down, but the price is still going up. But just letting you know that now is not the time to be going long Amazon unless you are willing to take the stop necessary. Let's look at Apple. Apple continues to go down, and if you look at, it's right against the 200-day moving average right now on the weekly. Let's go to the daily, and you could see that they need to hold in a major way this 92.47 level. If they break below that with some type of volume, they're definitely going to go to that $87 target. Let's look at VRX. So VRX is in that part of the land where you're saying, okay, they need to hold these lows, and the low that they need to hold is this 25.67 level. If not, they're going to break below to that $23 target. So continue to watch that one, and they negated with the close below this hammer a couple closes. So just be very, very cautious right here, and we'll see if they hold that level. Last but not least was Disney with the miss yesterday. And you can see they gapped down, but they held the $100 level, but that's just a psychological level. But we really want to see how they close because of how the weekly candle looks so far. So you have this retracement up, and we really want to see if they're going to close near the lower quarter of the candle for some continued down move. But again, we'll make sure we'll continue to look at things with the open mind to prepare yourself for both sides. Again, that's the reason why I give you the levels. I give you the levels so that you have numbers to say, oh, okay, if it hits this level, I know that I'm kind of in a cautious mode, because you can't just go off news. You can't just go off stuff like ZeroHedge or something. Those guys might have the truth, but you can't trade off of that. You would have been short from 2009. So you still have to have some price action to verify things that might actually be underlining very true regarding quantitative easing, the Fed, all these things. But I still can't use that stuff to trade unless I got a bitch of account and I'm willing to hold through a ton of pain, because if you keep calling it the top over and over and over again, you'll get it. But you usually, when they tell you that they call the top accurately, they never tell you about the 1,000 times that they didn't get it right. So again, we'll continue to watch things here. I'm sitting on some positions right now that are doing well, but I'm not adding. I'm waiting for Friday to add additional positions on. And there's nothing wrong with that. There's nothing wrong with having price levels that you say, okay, if it breaks below here versus it looks toppy, get a proper, price level to lean against, or have some type of target that you say, okay, hit this target and it did it in this fashion, so now I'm going to dead it off. But don't just say, oh, Yellen won't let it go that far down, or Obama won't let it go that far down, or Hillary won't get it. That's an intangible event, and that conversation, you were not sitting at the table for that, so you made it up. And if you trade shit like that, you are going to get mauled. Okay, you're just gonna get mauled. So just keep that stuff to message boards where you discuss. You're having great discussion, but do not trade off stuff like that. Okay, I'm just saying it because I'm seeing a lot of it. It's kind of annoying me because, again, you're just trapping, people that might not know how to trade, saying, oh shit, yeah, the Fed, this has been Fed related. Yeah, it might be the top. It might be right now. But we don't want to call it. We just want to trade the price action to break the low. So the break of 2026 is a lot more tangible and relevant to a trader versus, I think Yellen's going to, there's going to be more QE. Or if it gets to 1900, they'll never let it break below 1805 again because they need it for the election. Shut up. Like, just trade the price action and let's make some money that way. But if you're looking to talk politics and all that stuff, one, this is not the channel for you. And two, that is not a good indicator for you taking a trade or taking off a trade or even trading on a whole. Let's look at price. Price pays, price will not lie. Take care.